Welcome to PONG Options Trading. My name is Tammy Chambless. You may know me from some of my videos on 0 DTE options trading. I have something very exciting to share with you that's been in the works for about 6 months. This is an improved way to trade 0 DTE options using the assistance of a software we call PONG. If I can get it to work, there we go. Okay, PONG is based on mathematical models of market action. PONG was originally developed for institutional traders on longer range stock trades. The developer of PONG, Art Elzweig, saw a presentation of mine on 0 DTE trading and the decisions that had to be made, and a light bulb went off for him. He realized that his models could be tweaked to provide improved results over simply entering at the open of the day and selling certain deltas each day. That system works, but he showed me that improvements can be made in the entry and strike selection that using PONG. So PONG is specifically tailored to trade 0 DTE credit spreads. If you're not familiar with 0 DTE trades, 0 DTE means 0 days to expiration, which means you're trading options that expire that day, and therefore there is no overnight risk. That's one of the best advantages to this trade, is that lack of overnight risk. It uses options that expire the day of the trade. PONG generates signals for direction and strikes to use in selling 0 DTE bull put spreads or bear call spreads. We generally trade SPX or SPY. SPX options have Section 1256 tax advantages. That's of the U.S. IRS code. But you can use SPY for smaller accounts, but that doesn't have the tax advantages. And SPY has no exchange fees, unlike SPX. And you can use PONG on other underlyings. We haven't tested those, but you're free to use those and try them out on PONG. We strongly recommend that you have some experience trading 0 DTE credit spreads or iron condors before you use PONG. PONG options trading will not teach you how to trade options, but we will show you how to improve your trading on 0 DTE trades. The basic 0 DTE trade is entering every Monday, Wednesday, and Friday. As soon as PONG has run its calculations and provides a signal for entry. Then you enter using the direction recommended by PONG, and then you sell a strike that's recommended by PONG. And typically you would buy an SPX option that's 25 to 50 points further out of the money, or you'd buy an SPY option that is typically 4 to 5 points further out of the money. And why does this trade work? Low delta trades are high probability and low return trades. You'll get a small credit, but you'll have a high probability of those expiring worthless. So theta decay on these is working in your favor. And a good risk management system is critical to the success of this strategy to keep losses small. Why do we need PONG to trade? There are 3 important decisions to make in a 0 DTE trade. When to enter, and how many times have you entered a 0 DTE trade only to be stopped out immediately, and if you'd waited a little bit, you would have had a winning trade. PONG also helps with direction, and how many times have you entered on the wrong side of a market move and gotten stopped out? And then what strikes to sell, PONG can help with. How many times have you selected a short strike only to be stopped out and then the market turns around? PONG won't eliminate all of your losses, but it will greatly improve the probabilities that you will have positive results. There are several indicators used in PONG, and these are, in the next few slides, I'll show you a little bit about how PONG works and what you'll see on your screen when using PONG. These names won't mean much until you've seen and learned how to use PONG, but there are smart candles, slot indicator, an eco trend indicator, an R-bar indicator. And all of these terms are going to be included in what instructional materials that we were going to offer our subscribers, called Terminology and Illustrations of PONG Software, or TIPS, if you want to abbreviate that, to assist in the learning of the software and explain how to use each of the features in the PONG in detail. Here's a screenshot of a slide from PONG back in December, on December 21st. And generally, probably the only thing you're going to recognize on this chart is the chart of SPX. So that chart is the same. However, those candles are what we call smart candles. If you compare that to a chart that day of typical candles, you'll notice that the color is different. So PONG assigns a certain color to the candle, but the price of that candle is the correct price that you'll see. Then there are other things like these lines that we call PONG tables, and a slot indicator. We'll show you how to use that. R-bar indicator, which you can use to basically that, well, back to the slot indicator, it shows you when trends are changing. So you can see this downtrend, there's some red dots, and then the trend swings around and goes up. There are green dots on the slot indicator. Then the R-bar also shows a trend change, or more major trend change. So after this swing up with green R bars, you get a red R bar telling you that's likely to head down. And so there's some other trades you can take off of that besides the zero DTE trades, but we'll get into that not in this video, but after you've had some time to trade with PONG. And then the eco trend indicator, that's much like the RSI. So except it's a little more detailed in the information it provides. You know, it can provide when a trend change is coming by the colors on the dots in that eco trend. And if these indicators seem like a lot to understand and follow, don't worry. We've got automated signals. So PONG makes sure that the signals are all aligned for certain trade entries. And so when all you have to do is wait for a signal. You don't have to try to align the signals or see if everything's telling you the same thing. You just have to wait for these signals. So it prints a green line on the screen at the moment that those trends or those indicators are all aligning, and you wait until the end of that candle is printed, because sometimes those signals can pop in and pop out. But generally, it will put a note up here to sell puts, and so that's telling you when to enter a good time. And then if there's red lines that pop up, that's telling you to sell calls. So once you have a signal for the direction to trade, the signal just tells you when to enter and what direction to trade. Now you need to know the strike to trade. So determining strikes using PONG, these aren't simple indicators. These are based on mathematical models based on historic data to determine what PONG thinks is likely to happen. So they're calculated based on algorithms that incorporate recent, short-term, and long-term price action, as well as expected move of the underlying stock or ETF, among other factors. There's dozens of algorithms that go into PONG. So regarding the strikes, there are on the PONG screen what we call PONG tables, and each of those appears in a certain relationship to the stock price. And these can move around during the day as the stock price moves, and they can be in one location on one day and a different location on another day, just depending on price action. But generally what we do is sell at the yellow PONG table. This often provides a strike at around a delta, somewhere between delta 5 and delta 10. Sometimes it's lower, sometimes it's higher, just depending on how close that PONG table is to the strike. But you can generally rely on that to be fairly accurate and for the stock to not get there during the day. And so that's what we use to sell to determine where our short strikes are. We call that the yellow PONG table, as it says there. Then there's the outer boundary. Sometimes that yellow PONG table will be very close to the current stock price, and the delta is greater than delta 20. And we don't recommend trading delta 20 or closer. So you may have to select a strike that's a little further out. So there are additional tables provided further out that will give you recommended strikes, and you can trade those. You just go look at the delta or the premium you're getting for those. If that's acceptable, you can trade that. So if you need to move your strikes around depending on the premium you're getting, you can do that with PONG. And then there's also, for trades that you enter after the first hour of trading, there's what we call the middle PONG table, which are these dotted black lines. And they are lines that they're a little closer to the stock price, but we have done back testing, and based on those, the probabilities of those getting hit are later in the day are roughly the same as the yellow lines, and therefore later in the day you can take those. I would not take those early in the day, and those dotted lines can in the early part of the day can be quite close to the existing or the current stock price. So you need to pay attention to the premium and the delta you're trading to make sure you've got an acceptable trade. But later in the day, you can use these to trade. Now there's also an inner PONG table, which are these darker blue lines, and they move around with the stock price and generally provide a shorter term support and resistance line for trading. And when the PONG table flips down, we call that a flip down, or it moves up and we call that a PONG table flip up. So they will move up and down during the day, just along with price action. We do not trade those inner PONG tables. That's there just for information. Then, along with PONG, we've developed a set of trading rules to use specifically with PONG. If you're familiar with 0DTE trades, you'll find that they're very familiar, and you'll only need to learn a few tips and tricks to trade with PONG that are unique to PONG. And we'll provide subscribers with a document called Outline of Trading Rules that'll be available on our website that you can use as a reference. And as always, I recommend trading new strategies and new tools. Trade small until you get a feel for the trading rules and the feel for the tools you're using, and give yourself time to learn and understand all the nuances of trading with PONG and with these new trading rules. They'll seem similar to what you've traded, but there are some differences. And like with my old 0DTE system, you can use stops with this, and that's the easiest way to manage these trades and to keep losses small. And you can use whatever stop you feel comfortable with. We're providing backtesting results for stops from 2 times the initial credit up to 6 times the initial credit, which gives you a net 1 times loss or a net 5 times loss. And you can choose what you're most comfortable with and what risk you're most comfortable with. We're not, you can trade this how you want. We're not limiting that, but we're giving you some recommendations based on our back testing. And it may give you some insights that you haven't had before. And trade results are slightly different using PONG than they are on the old 0DTE system. So you may want to familiarize yourself with the backtest results with PONG to see how it's different than maybe how you have been trading. And because you are using PONG to determine trade direction, you'll find you have fewer losses than you do with other 0DTE systems. And with fewer losses, we believe you'll be more profitable. That this will give you a higher percentage of winning trades and higher returns than you have gotten on the old zero DTE system. So, in addition to using stops, we've developed a rolling strategy. Kind of the holy grail of trading is how to roll a loss into a winning trade. And we only recommend this for larger accounts. We wouldn't recommend this for an account less than $100,000. You've got to have plenty of extra buying power available because those losses can add up during a roll and be I've seen them as great in backtesting as 20 to 30% of my account in backtesting and in real trading. I've been rolling since August, so in real trading as well. And so you've got to be prepared mentally, and your account has to be prepared for handling those size losses. But very often you can turn a losing trade into a winner. And we'll show you how to do that. You can choose to exit a trade and roll to the next expiration when the stop touches or breaches your short strike. And there's a particular way to do that when you're trading spreads. When you're trading naked options, it's very easy to roll out to the next expiration. But with spreads, you've got to pay attention to more things that are going on with that trade. You always want to roll for a credit. You never want to roll for a debit. So you're just continuing to add to the profits of your trade with each roll. And then rolling does introduce overnight risk. So be aware of that. It takes away one of the advantages of zero DTE trades. So if you like that advantage, you may just want to use a stop. And we can show you how to improve your results based on which stop and how much risk you're taking. And you can achieve not as great of results with the rolling, but very good results. And then we will provide our subscribers with detailed instructional materials on learning how to roll and rules for rolling. There is the initial roll where you roll into a vertical spread. And then what we found is if the trade continues to go against you and you continue to roll a vertical spread, you have to keep widening those strikes. So that increases your risk, which we really do not recommend. It's okay to roll once, but we have another strategy that we moved to on the second roll that provides much better returns and helps you recoup a loss quickly. So you're not in a roll trade. I've heard of roll trades going on for a year or two or more, and you don't want to get in that situation where you're tying up buying power that you need for trading. So we can show you how to roll and avoid all those pitfalls that you normally hit when you're rolling, and the reason most people stay away from rolling too. But we've worked through this and back tested it thoroughly and have confidence in what we're showing you. Then the detailed backtesting results, we've completed thorough backtesting on PONG for as long as zero DTE options have been available on Monday, Wednesday, Friday trades. So those started in March 2016. So anybody that's showing you zero DTE trades that go back to 2010 or 2008, they're using either hypothetical data, they're not using true zero DTE trades on Monday, Wednesday, Friday trades. So this is traded on real option data that was available that day. Our back testing was done on 1 minute intraday data that we purchased, or one of our team members had purchased from CBOE on the SPX, and they scrub that data to get rid of bad data in that, and we use that to test the system from March 2016 through December 2020. And we tested multiple strategies, including various widths of spreads, various stops, taking to the touch of a strike and rolling, just kind of to test it all out. This is like the stress test of the PONG trading. And then for our back testing, we used an initial count size of $100,000 so that we could do some of the rolling strategies and things. You do not have to have an account size that large, especially if you're not going to roll your trades, if you're just using a stop. But that's what was used in the back test. So you can multiply by 10 or divide by 10 to get to an account size that's closer to what you're typically used to trading. And then we also included fees and commissions and slippage in our calculations. Now, as always, past results of backtest are not indicative of future performance. This is just showing you what happened in past years using these same rules. And also, your trading decisions are your responsibility alone. We're not recommending specific trading positions. We're just showing you the rules that we generally use, and you're welcome to change those or trade them however you want. So the back test that we did was taken, you saw that on PONG there are multiple signals that are given. We use the first signal because usually the best credit is early in the morning. So we just used the first signal unless an opposite signal was given, and then we took both signals. But if there were multiple call signals, we just took the first signal. If there was multiple call signals and then all of a sudden a put signal comes up, we'll trade that put at the same time because it requires, you don't have to increase your buying power to trade that. Then also, we traded only trades that would give us a greater than 25-cent credit. And the reason is because most of us are not going to take excuse me, a trade where we can only get 25 or 15-cent credit or 20-cent credit. We felt like 25 cents was the minimum amount of credit we would want to trade. Again, that may seem like a smaller credit, but you're going to have a higher win rate and a higher probability of success using PONG. And for other parameters that we use, for trade using stops, we used a max risk of 3%. You can actually increase your results if you increase that to 5% and just take a little bit bigger risk. You're trading more contracts. And so it's going to depend on your risk tolerance. But I increased that from the normal 2% because most of the time, even with 2%, you're getting stopped out. You've got slippage. You're trading between risking 2 and 3% of your account anyway. So I just use 3% as a max. And then I use 75% of the max buying power. If you're trading with a stop, I couldn't find any reason to not bump up the buying power usage that for that trade. If you're trading roll trades, there is a good reason for not increasing your buying power because you can run out of buying power very quickly in a roll trade. So for roll trades, the maximum buying power used was 50%. But with stops, we increased that to 75%. And the back test follows strict trading rules. In live trading, there are additional trades you can take to improve your results, even over what's shown in the back test, or you may choose to trade it a little differently. But in our back test, we based it on the rules that we will share with you in the trading plan. So some basic results note that there were about 624 trades in our study in all years, and we list out individual years here if you want to pay attention. In those early days there were less options available, less strikes available, and so sometimes we just wouldn't be able to enter a trade. So there are fewer trades in 2016 and more trades in later years. Of those 624 trades, only 29 trades had signals on two sides. There were also some trading days where no signal was taken, and if there was no signal, there's no trade. We also removed trades on FOMC days because very often those announcements will affect the market negatively, and we just decided that, hey, let's just avoid that risk because PONG can't tell what the Fed is going to do. So we pull those trades out. you'll see that the average delta that resulted in the trading rules and the strike selections using PONG was around delta 9, sometimes higher, delta 11 in 2016, sometimes a little lower, around delta 9, but on average it was around delta 9. That doesn't mean every day you're going to be selling delta 9. Sometimes those strikes will be delta 5 or delta 3. Sometimes they'll be delta 15. So it really varies. So it's not like the old 0 DTE system where you sell a certain delta every day. And then the average premium collected was 71 cents. So even in some of these low volatility years, the premium was still a good premium. And in 2020, it was really good with $1.20 average this year. But back in 2016, low volatility year, and 2017 was a low volatility year, and 19 was low volatility. Those are lower credits, but still good win rates. And then I give you the VIX level so you can use that when you're comparing results in those strategies. Most of these years are low, relatively low VIX levels. 2020, the VIX level in 2020 was comparable to what it was in 2008, 2009, and then all the way back to 2000 and 2001 through 2002, the VIX level was up around 30, 32. So it gives you an idea of what this strategy can do in a bear market. So as a baseline, let's compare SPX performance. So keep these numbers in mind. And I'm just going to point out two numbers as we move forward. You can take your time and go through these slides and go through the information that we'll post on the website when it's available and compare all of these results in detail to make your decision. But CAGR is compounded annual growth rate. So it's a good measure. It's calculated using returns from the year, but it is factored to average that out over, give you a good average rate of return that you can expect trading this. And the max drawdown. So the max drawdown, and this was just buying and holding SPX at the start of the back test, a $100,000 account. So the max drawdown was 9%, and that was in the year 2018. So 14% annual return and 9.6% drawdown. Let's compare how that looks to some of our other trading strategies. This strategy uses a stop at 2 times the initial credit. So it's a little less than you may be used to at 3 times the initial credit. But what we found is it gave the best results using PONG. Now, the win rate seems low at 70%, but the CAGR is more than twice, the compounded annual growth rate is more than twice what you get with just trading SPX. And the max drawdown is exactly the same as SPX on a typical year, so or on an average. So you're not increasing your risk, and with 70% winners on this strategy, and that's risking 3% of your account using 75% of your buying power, you're able to achieve an average annual return of 38%. Now, if you look at 2020, you could have achieved a 90% return. So this strategy appears to do better, even better, when volatility is high. In a high trending market, that's when PONG does its best. In a choppy market like 2008 was, it probably struggles. But if I'll slip back one slide. If you notice, 2018 was a losing strategy for buy and hold SPX traders. And using PONG, at least you had 11% return, which is about, 19% better than you would have done trading SPX, just buy and hold. Now, I'll show you a little bit about how you can tweak the parameters and improve your results. So this is trading using a 50 wide spread. This next slide uses a 25 wide spread. And you can see that the percent winners is the same because we're not changing our short strike. We get stopped out the same amount. But the compounded annual growth rate is 52.9%. And the max drawdown is only increased slightly to 10%. The prior slides were 38.5% return and 9.6 max drawdown. And so we're at 52% average return per year and a 10% drawdown. Now, what that means using a stop is the drawdown is multiple stop outs that happen in a row. So you can encounter times, like I know many of you have in December and January, and I think August, September last year, it was tough trading 0 DTE trades because it seemed like every day or every other day you were getting stopped out. And there are times like that in any strategy. But with PONG, it minimizes that drawdown to 10% maximum drawdown. And if you notice in 2020, which, remember the swings that we saw in March and April, it only had a 7.8% drawdown. So that's less than an average year just on a buy and hold strategy in SPX. And again, this limits your risk to 3% of your account and uses 75% of your buying power. Now, the best returns that we've gotten use the rolling strategy. And again, this is not for everybody because you are taking risk. If you'll notice, the maximum drawdown is 28.3. And I would say that happens pretty regularly in a roll, that you're down quite a bit because what the strategy is, you don't roll until you touch the strike. So your loss can be pretty large at that point, depending on what time of day that happens. If it happens earlier in the day, it's a larger loss. Later in the day, it's less of a loss, but it's still a larger loss than using stops. However, notice the annual return using a rolling strategy is 91.8%. So that's a pretty high average annual return. And then if you look in 2020, the return this year was 253% using this strategy. All of the years were greater than 40% return. All of the years were greater than the average return using a stop. So if you can, it's a good idea to learn this. And you could also use this to trade some of your trades without a stop and some of your trades with a stop. You don't have to trade all one way. You may want to learn just trading one contract and rolling, and that'd be a good way to learn. And then notice the win rate here for 0 DTE winners down toward the bottom of the chart is the win rate of 90%. So based on our average delta 9, that makes a lot of sense that we're getting stopped out or we're having 91% winners and touching the strike about 9% of the time. Now, that also can vary by year. So that is just the 0 DTE component. And then there's rolling components as well. We separated that out to look at just how does the rolling trades do? How did the rolling trades do? And you'll notice there's less of a percent winner in that sometimes you have to roll multiple times. You'll roll once, that will lose. You'll roll again, that may lose, and you'll roll a third time, and then you end up with a winner. So that takes into account all of those losers that you may encounter during the rolling. And then in the end, even though it says percent all winners, that's all trades that were involved in rolling. 93% in 2020, average 87%, still a pretty high rate. But know that in our back test, we did not find a trade that we could not roll into a winner. And we weren't cherry picking. I was doing this blind, not knowing what was going to happen, trading using a software where I enter my trade and I trade it just like we do during a trading day, and it would hit me, and then I would have to roll, and I'd have to make a decision about when to roll to. So I was using all the rules that we will share with you in our trading. And again, all of these results will be available on the website, along with many more strategies and combinations of strategies that you can use to decide how you want to trade Pong. So hopefully that will be helpful. And after all that, if you're interested in signing up for Pong, our website is not yet up and running, but it should be sometime in February. And you can check us out at www.pongoptionstrading.com. And there are 3 packages offered on that website based on software that's developed by Pong Options Trading. Only one of those packages is for 0 DTE trades. That's package A. The other packages are for other trades and not 0 DTE trades. They may be for stock trades or they may be for some option trades, but they are not 0 DTE trades. So package B is other software. Package C is a signal service, but again, that is not a signal service for 0 DTE trades. I know some of you have emailed me that, hey, I'll just try the signal service and see how I like it, and then I'll do the software if I like it. Well, unfortunately, you're not going to be able to do that. But I'll explain in a minute what I am willing to offer and what you can do to get a feel for how Pong works. So what you do to sign up for a package is go to the website and click to sign up for package A for 0 DTE options trading, and that will start an approval process. And that once you click on that, so package A is the one you want, and because there is an approval process, because Pong Options Trading is a small company, not a great number of employees. In fact, there's probably about 3 or 4 of us that are working on this right now, and I'm not an employee, I'm a volunteer, just a trader helping this guy out. And there's an approval process because to start out with, we're going to limit it to a certain number of traders. And I know there are a lot of you interested in this, and I know we will not be able to accommodate everyone. But as we get everything up and running, hopefully we'll be able to accommodate more traders. And we're going to limit the people initially to start trading so we can ensure that there's a smooth process to get everybody up and running, and everyone that signs up gets adequate support. What we don't want to happen is you get Pong, you don't know how to use it, you try to email us and we're busy with other traders and you don't get a response. We don't want that to happen. So we're going to limit the number of traders so that you can get good support. You can get us on the phone or by text, or we're going to create a Slack group for this. If you got our email announcement, it told you all the things that we're offering. Right now, we have a Facebook page up. Our website will be up soon, and you can sign up for this. So one of the things I'm going to do, because we're not offering like a free trial for Pong, is I'm going to open up a Zoom meeting that's free for anybody. You can share that link. I think my Zoom account limits that to 100 people. So I'll watch how many people are joining, and if we run out of room, I may extend the date. But the week of February 8th, on Monday, Wednesday, and Friday, for the first 2 hours of trading, I'll be hosting a Zoom call showing Pong in action. And you can log on during that time and see Pong. I'll be there showing you some things about it and answering any questions that you have. And so you can get a look and feel before you have to sign up for it or pay any money for it. And we may do that in the future again, depending on how much interest there is. And so watch for any announcements on our Facebook page. We're going to post this video on YouTube, and I may send out links to the web page. but how you can get in touch with us if you want to find out more, email us at support@pongoptionstrading.com. And if you're not already on our mailing list, you can get on our mailing list there. Just ask to be added to the mailing list. And I'll send out any announcements to everybody on the mailing list. And then I'll also announce when our website is up and running and we're able to add traders. And then also we have a Facebook support group right now while we're getting everything going. You can post questions there if you like. And then for those of you who may not be as familiar with the zero DTE trades, and Pong may not be for you yet, but if you want to learn more about those trades, there's a YouTube video I think it's a 3-hour video, and you can search for YouTube for Wealth Enjoy Tammy Chambless. And there's a video I made in August for a trading group, and that's the most comprehensive video I've made about that strategy. And also, if you want the PDF file of the slides, email support@Pong Options Trading and ask for the PDF of those slides, or even of this slideshow of this video. I'll be willing to share the PDF file of this. So I want to thank our team, especially Art Elswig, the software developer for Pong Options Trading, who made this software available to us traders. He could have chosen not to do that and just take my strategy and use his software and make a bunch of money, but he wants to help traders too, and he's involved in training traders and just getting good information in traders' hands. I also want to thank our beta testers. We started with a group of about 20. I think it narrowed down to about 10, and there's a select few who have stuck with us through thick and thin, who put in many hours in trading and meetings to review and discuss Pong, and have made valuable suggestions about improving it for all traders who will use it. My name again is Tammy Chambless, and I volunteered to help introduce people to Pong and help you learn how to use it. I just want to get good information and good knowledge in your hands so you as traders can make the best decisions for your trading. So thank you very much for attending the video, and let's go trade. Thank you.